Good morning, everybody. Just wanted to make a quick video here for YouTube. Was really occupied this morning and I missed actually. I'm not going over the whole daily analysis, but I was looking to let's do this quickly, we need good content. So we had an old day one bullish fair value gap here, and when I got at my computer this morning, I was actually a bit in doubt if I was gonna buy or if I was gonna wait until the second confirmation. So I waited a bit, and you see this fair value gap. What happened? Let's go to the 5 minutes. It tapped the bottom. That was actually my signal to buy, and I waited a little too long, and then price got here in a few minutes and it wasn't worth the risk anymore. So I started looking for another setup, and we had this fair value gap here. So I sold here, went 10 pips, let's check that quickly out, went 10 pips in drawdown about, and then we had a nice reversal and I got out manually here. I'll show you later on another chart, then you can see the numbers too. It's on my funded account that I took that scalp, and this was actually another calculation, but I didn't take it. This is the ICT unicorn, perfect timing, but because it's already here 11:55, I wasn't that keen on risking it, especially also if you see on the 15 minutes here, it pushes up in one time, the risk becomes too big. Although it would be a nice scalp, there is more liquidity to the downside to be mitigated. So I'm expecting to see prices even go lower than the fair value gap, but yeah, if you take a nice win, then you better stay off the buttons for a while. So, but let's get back into the 5 minutes here. So what can we see happening here? You see we have an internal 5-minute market structure shift, but to have a real bullish reaction, the market can't just let all these people here that go long win. There has to be manipulation. So people get out early and move their stops getting hit, you know, like people that get in here, they trail their stop loss below these 3 equal lows, and then when price moves through, and I'm gonna show again with my blue box theory. Let's put this here and I'll show you what I mean. Look, from this low to that high, and look how perfect it got tapped. I got out a little earlier. No, I got out at, let's check out quickly. I'm gonna fetch another chart. I don't know if I can show this actually, but I think it's not gonna be a problem. So let me get this chart over here. Seems like they don't want to let me get the chart, but well, now we're here. So this is my trade locker account. It's my 100k funded, and you can see we had the losses that I set from, when was it, Tuesday. Took a few losses here, 1080, 20 pips in total. 21, but that's okay. And this is the win that we made this morning. You can see 2025 January 2009 at 11:20, 10 sold, and TP price was 427. So that was my fixed TP, but I got out somewhere here at 550 because I knew the fair value gap here was gonna give a reaction and it taps the blue box. I knew it was better just to get out, take profit here, then go back up, get a unicorn, and then go down again. Trading is about making money, so that's what we're doing here. And you see, account nicely in profit, margin available, almost 105k. So just showing that you guys know that I'm not just telling bullshit. I actually was I entered here and I was actually even thinking on putting 10 more here but I didn't, because, and I'm gonna show you why. You see, we take out the Asian lows, and if this reaction continues, let me clean this up so we have a clearer view. If this reaction here continues and first taps in here in this fair value gap without creating the necessary liquidity, then look, this is what I mean. Then this would be, this is what I think is gonna happen now, and then we go down again. That's what I think is gonna happen now. But the other possibility of this morning was we have the Asian high with a fair value gap above, a lot of equal highs, and let's zoom in. The previous day low, the previous day high, they weren't mitigated, and there is a higher time frame golden box with fair value gap inside above the new week opening gap. So taking all this in account, I was pretty bullish, but I couldn't leave this scalp on the table. I didn't know how deep it was gonna go until we got this confirmation here, and then I thought, like, yeah, I'm gonna get to the second point where I actually was looking for, let me see if I still, no, I don't have it on my chart anymore. My actual long scalp, my second one would have been here below, but you see, price didn't come back, and we always try to find the best entries possible. This would have been too brutal. So what can happen now that we go into mitigation during noon, during London lunch till New York kill zone open, and that we get another attempt of buying these double bottoms? That would be a nice setup. This, I'm gonna erase it, but what I wanted to quickly show, and I know I draw a lot, I put a lot of lipstick on my charts, but that's how I know what I'm doing. Those are my points of interest. If this one would have first tap back into this fair value gap, and we got this higher high out of this reaction, then there would have been a new imbalance created in this beginning of the leg and a new order block close to this breaker. So then we could have expected the morning session would have had this type of reaction. Now, because we didn't tap into the liquidity, it was clear that the market was gonna look for a new discount. Look. And where does it tap? So we set the low to the high here. And where does price come back to the fair value gap in the golden zone? So my strategy really works. And I just want to say, if somebody wants to learn, wants advice, just send me a message. My main business isn't technical analysis training, but I can teach people quickly how to do good analysis and start making money. It's not that hard. It's pretty simple to explain all. But you see what I mean? If we first would have had a touch here below the 50% and this fair value gap would have been gone, then we would have seen this as our PD array, because then we would have been bullish, and then I count the 50% of the blue box as the major point of interest. And I've seen that happen a lot. So, and especially with other confluences, if this would have happened, then we had the 50% of this fair value gap in the 50% of the blue zone, in the blue box. So then this would have been our setup. But now we're speaking on hindsight, and that's always easy, of course. But yeah, we're gonna start looking now for the next setups. Probably we're gonna see price now, because we have a clear move and we have a reversed unicorn here, and we have an internal smaller unicorn that isn't playing out. You see, this is now what is happening. So I expect a higher high here, trade back into the liquidity, even a higher high, and a return, because you see we would tap the blue box here again. Let me put this a little more, and I'll even show that what I mean, why it's not just imaginary thinking, but it's all based on technical analysis and a lot of experience by trial and error. Look, what happens here is, and I have to change the color because green is my 50% FIB color. So let me quickly change that into purple. You see, then price would create higher highs, higher lows, higher highs. Take the liquidity here at the blue box, and then we have a new point of interest. Let me just take another FIB. Then this point here, if I'm right, then we're gonna see a lower low, or at least the low of the day taken out. And there is no special news event. The only thing here is we have to be extremely careful with the ABC correction, that we don't get an A, B, C, D and an E, because price is gonna be relatively heavy attracted to these highs here. And especially this fair value gap and then the equal highs, can be easy that we see price show real bullishness here, push even higher to this fair value gap and reverse from there. So this then becomes this, and I wouldn't even be surprised to see us go here to the old 50% FIP or the new week opening gap. Maybe not today, but there's not so much liquidity, so intraday now we have to wait a bit to see what the market presents. But like I said, this is all on hindsight. If this happens, then I would wait to see what happens here in this zone, and if we get a new reaction, then we can catch the continuation of the bearish trend. And why do I say, or why do I draw this? Because we want to see something like this happen, where the volume starts disappearing, the buy volume starts disappearing, and the algorithm starts changing to a sell model again. And then if we get here a market structure shift, let me erase this quickly so you don't see too much lines. So this coming from here, maybe in two legs like we drawn earlier, like this. Damn, this is happening over and over, so I'm not gonna be bothered by that, just laugh with it. So we see this leg form like this, and then we see price getting exhausted, tapping into the last limit in its highest high, and then we get an internal lower fractal market structure shift or change of character somewhere.